The terrible war in Ukraine cannot be ignored, and how this might impact the UK economy. When Russia invaded Ukraine, Europe and the world held their breath. And apart from the horrors such a conflict always brings, the Ukraine conflict could also have an impact on the UK housing market. The uncertainty of the impact of the conflict will put off some people to take the step to buy a new house, especially when inflation is at such a high level. Of course, it is difficult and complex to predict what will happen to the housing market going forward. Ukraine conflict will have wider consequences for the world economies, especially the UK housing market. As a consequence, the rise in house prices we have seen in the past years will slow down. Oil and gas prices are increasing due to the Ukraine conflict, leading to rising inflation. Given that inflation is already at a record level in the UK, 5.5% in January 2022, further increases will be a problem. Bank of England will increase the interest rate to lower inflation, which they have already done twice this year. The hot housing market that accelerated in the past 2 years is likely to slow down. But only time will tell what the long-term impact on the housing market will be. Many real estate investors now believe the inflationary period will be more prolonged because of the conflict. As a result of the rise in interest rate, mortgage rates are expected to go up, making it more difficult for many people to get a mortgage. It is expected that the average mortgage rate will rise to 3.2%. The median income required to cover a mortgage for an average priced home would be close to 45%, the highest level since 2008. Higher interest rates and more expensive mortgage products means that fewer people will be taking out mortgages. The rise of interest rate will affect first-time buyers, and also second steppers will also be faced with higher mortgage rates. Most of them will no longer be able to afford to upgrade their home. Those who have already secured a fixed-rate mortgage may well be grateful they have. In recent years, the demand for houses has far outweighed the supply, since buy-to-let properties becoming a more mainstream and reliable investment over the last few decades. In the past 2 years, more people have been able to buy a home, because of the stamp duty holiday, and the fact that during several lockdowns, people were able to save more money for the necessary deposits. However, these advantages are now no longer there, with inflation, rising energy bills and higher costs of living squeezing household budgets. As a consequence, fewer people will be afford to buy a house, which will result to demand reduction that has driven recent house price rises. With demand likely to decrease, the housing market will slow down and become more balanced. This would expected to happen anyway, but the Ukraine conflict might accelerate slowing down. Anyway, it is unlikely that we will see a sudden slump in house prices. It is predicted that house prices will rise much more slowly over the next few years. Real estate portfolios have very limited to no direct exposure to assets in Russia or Ukraine. Russian buyers poured a lot of investment in the most expensive areas of London. According to the Land Registry, only 1,127 properties at the end of 2021 were owned by Russians. The UK government has now introduced a host of sanctions against Russia, which is expected to lead to a small decrease in Russian buyers in the UK. It is probably too early to gauge the likely impact of the war in Ukraine on the housing market. How house prices truly react to the Russian invasion would be seen after several months, but it seems unlikely that prices are robust enough to cope with the unfolding crisis, especially against the backdrop of an economy trying to recover after the pandemic. Also, cheap mortgage deals will likely be no more. Already several sales have agreed at fairly robust prices. The expected additional rise in the cost of living driven by energy prices and possibly interest rates will reduce confidence and make buyers even more determined not to overpay. House prices will remain high, as there is simply still much demand and too little stock. Thank you for watching the video. If you watch all my lectures, you may be able to start investing in rental properties a little quicker. Please subscribe to my channel and press the bell to get alerts when a new video is posted. Please write your comments, questions, or concerns you would like to share.